There's 15 different stock exchanges across those 54 countries. Each one is different, lots of cultures, lots of languages. So one needs to understand the markets, understand the underlying dynamics, and understand the local financial institutions and the investment environments in these areas. I think the one thing that's different and that stands out is that there are a number of very high quality companies that have been listed and have been operating in these markets for decades. These companies generate phenomenal return on invested capital, they grow rapidly, and they leverage to this growing African middle class that we've spoken about a lot today. And the great thing about this is that these companies are trading at significant discounts to their international peers, and as well as their absolute value if you just discount the free cash flow that they generate. So I think a long-term investment strategy that isn't focused on short-term noise or short-term share price movements is something that can really pay off. And it doesn't, we've spoken about a lot of these companies before in this forum, but these companies are simple companies. They focus on one thing, that's generating cash flows for their shareholders, and they do that very well. And these companies are operating exceptionally well, even in this environment. So a lot of people have asked me, how's the international share prices, how they're affecting you, and how's the sentiment that's so negative affecting us? And sure, it hurts. I'm a big investor in my own fund, big in my small terms, but for me it's big and it hurts. But at the same time, the opportunity is enormous. And the reason being is that the growth that we're seeing in Africa and the growth that we're seeing in the operating results of our companies, even today, have got very little to do with the credit crisis in the US or the European issues, or the injection of liquidity that's fueling an unsustainable economic growth in some other markets. For us, we're seeing real economic growth that's based on population growth, urbanization rates that is higher than anywhere else other than maybe China, and a young population that's moving to the cities and building a service and agriculture and industrial economies in those places. And we're taking advantage of that in my view, in a responsible, very long-term way. And I think the proof is in the pudding. This fund has been around for 15 years, since 1994, and it's performed, its compound annual growth rate has been 15% in dollar terms. And that's just by sticking to the basics, just sticking to the fundamentals. And there are a lot of similarities to that private equity space, and a lot of these companies don't trade that much, and hence you need to take a longer term view and build up stakes slowly but surely in some of these high quality gem companies. And I think the way that we look at these things and the strong value bias that we have and the very long term approach that we take, I think will stand us in good stead going forward. And I hope to replicate the returns that we have done in the past, and I certainly we'll be very surprised if we don't, given the opportunities that are out there today.
Doing business in Africa, you can't afford to be without Africa Investor.